Give it a second. Alright, good morning, good evening, good afternoon, students and traders and analysts from all around the world. This is the FX boss, right? Maybe not your boss. Alright, so open and give me a second. Classes, right? Classes, alright. What do we have today? Trading Japanese candlestick, bullish candlestick formation. Alright. Alright everybody, this is the professional Forex trading course 101. It's for hello Brazil! Bro, I forgot, where are you from? Malaysia? Philippines? Alright everybody, do you want to become a professional trader? What do you want? What do you want? Do you want to become a funded trader? What do you want? Or do you want to become a hedge fund trader? What do you want? Tell me, what do you want? Broto, what do you want? Do you want to become a professional trader working for yourself? Do you want to become a funded trader? Do you want Morris Capital or Darwinex maybe to give you money? Indonesia, alright. Or do you want to become a hedge fund trader, meaning that I can call you and say, alright, let's get down to business, you know, whatever. Funded trader, alright. What are you thinking? Are you thinking trading.com, or are you thinking Darwinex Zero, or any other, I mean, whatever the case? Boss, a lot of movement today. True, we had the news, right? There was a news, right? We had the news here. We had USD news 10:30. Now it's noon my time, so looks like positive news. Therefore, you know, the dollar is strong dollar. Alright, it's from yesterday, right? I have no idea. Indonesia, go to Darwinex Zero. Alright, it's 38. At the end of class, one more time I'm going to show you now, alright? It's 38. And I have a slide here, don't I? Which one? This one maybe? There you go. Darwinex Zero. Okay, end of class. Darwinex Zero cost you 38 euros per month. And it's real, not demo, you know. It's a real account. End of class, alright? Alright everybody, so manual. Japanese candlestick, the sign language of the market, right? So we talked about yesterday, and candlestick formations are the sign language of the market. They are telling us the right time according to the formation to enter the trade. Remember this one, candlestick formations are the sign language and they are showing us the right time. Alright? Everybody, if I go on Euro NZD, give me a second. Alright. If I go on Euro New Zealand, 4-hour chart, what should I do? What do you think? Analyze the chart in any way you want. Zoom in, zoom out, monthly, weekly, daily, 4-hour, 2-hour, 15-minute. What should I do? YouTubers too, please. Yes, YouTube students. Dukascopy Academy YouTube students, please. You are looking at Euro New Zealand 4-hour chart. What should we do? What should I do? And we are specifically talking about candles. Yesterday we learned about the bodies and the pressure and the decision. I was explaining you why most likely 7 times out of 10 NZD CAD is going to fall, which it did. Alright? No, I'm not smart. This is the skill that you are trying to learn, alright? Believe me, everybody, I'm not that smart. I'm not stupid either, right? But I'm in the, talking about IQ, more or less, right? So NZD, Euro NZD 4-hour chart, what should I do? Hedge fund trader Broto, what do you think? No, don't be shy, we are here to learn. What do you think? But we're talking about candlestick formations and candles. Now, the manual is saying candlestick formations are the sign language of the market. They are telling us the right time according to the formation to enter the trade. So, how do you understand what is happening right now? Whatever might be the case, 1 candle, the last 3 candles, the last 4 candles. I will wait uptrend break to go long. Very good. Everybody, now listen to this. You are going to learn today how to lose less. Alright? Would you like to learn how to lose less? Boss, teach me how to make money. You need to learn how to lose less first. Alright? Now, if I go here, right, and if I zoom out, if I go here and I zoom out, everybody, and let's go on the 2-hour chart, even better, right? What would you do in here? Well, everybody has different strategies, but just maybe, somebody's going to say, all right, we're at past support or whatever, and maybe, down counter trendline break, Agreed, everybody? So most likely, just an example, on the 2-hour chart, I would buy, right? Okay. And if I would buy, what would happen? I would lose, agree? Now, look at this. When I'm buying, I put the vertical line. I'm not sure if you are seeing it. I put a vertical line, red, and now I'm going to go on the daily chart. Daily chart. Daily chart. And I'm going to make it transparent. Can you see what I was buying? Wow, right? Make sense? On the 2-hour chart, you were seeing the market moving up. You were seeing maybe an uptrend, I don't know. But because this is the 2-hour chart, you are thinking the market's moving up, which it did, but then when you've entered, the market pushed down. Alright? Now, why this happens, what explains this phenomena are the candles. Alright? Are the candles. candles and candlestick formations. So when you are buying, everybody, you are buying this market. Remember, when the 2-hour chart is moving up and closing candles, the daily is still vibrating. Make sense? It's going up and down and up and down. All right? So when you bought, you bought the market somewhere up in here. Make sense? On the 2-hour chart. Now, I don't know how to tell you how extremely important is it. Pen and paper, type in the chat that you have pen and paper. YouTubers too. YouTube students, type in the chat, I have pen and paper. I guarantee you, if you can apply these, you are going to lose less. Guaranteed. Yeah, you can type whatever, Word document, but pen and paper, print this out. This is part of the skill. There are some reasons why you are in the market and a professional trader is not in the market. Not yet. There is a reason why you are buying the 2-hour chart up in here and a professional trader did not. Make sense? Alright. Alright. James, I have a pen. Okay, let's write this down. Before I enter the trade, I need to wait for the higher time frame candle to close. Let's write this down. Before I enter the trade, yes, this could be a part of the strategy rule that you are forming. Very good. Before I enter the trade, I must wait for the higher time frame candle to close. That's the deal. Alright? Type in the chat done when you've done so we can move forward. Boss, can you explain? Sure, just give me a second. James, where are you from? James, where are you from? Brota is from Indonesia. Where are you from, James? Hedge fund trader James, where are you from? Before I enter the trade, I must wait for the higher time frame candle to close. Meaning, if I'm looking at the 1-hour chart, if I'm looking, look here, 1-hour chart, right? Done, alright. Do you see, everybody, the 1-hour chart? You are looking at the 1-hour chart, is moving up, and you are buying it. Remember, you don't see the future, right? You don't see the future, you see something like this. So the 1-hour chart is moving up, you know, it's in an uptrend, right? And, or if you look at the 2-hour chart, similar, the market's moving up in an uptrend. And the 4-hour chart, there is no uptrend, but the market is going up. So the 1-hour chart, 2-hour chart, 4-hour chart, you know, the next one, the higher time frame is we've learned all of this. Canada, very, very good, excellent. Been there 2 times. Been to Vancouver and Toronto, love the place. Been twice to Canada, beautiful country. I've been in Indonesia too, don't worry, bro. I've been in Indonesia too. I've been to Kuala Lumpur and around. I've been to Bali and around. Is Kuala Lumpur Indonesia or Bali? Alright, back to class everybody. So if I'm looking at the 1 hour chart and 2 hour chart and the 4 hour chart, the market is up, agreed, and it doesn't matter what methodology, counter trend line breaks, Ichimoku, Fibonacci, Elliott wave, whatever, golden unicorns and rainbows, if I would buy, I would lose. If I can get emotionally skilled, to wait for the higher time frame, in this case is the daily, I would not enter the market. Can you understand this, everybody? I would not enter the market. Right? Can you see the candle? No chance I'm buying this candle. Agreed? Bali is Indonesia, in Malaysia, alright. Bali, beautiful place too. Brota, do you speak Balinese? I remember some stuff, you know, so. Alright, everybody? You would not buy this candle, would you? If we are talking about... yeah, the markets are moving and receiving a lot of alarms and... Okay? Boss, how can I trade with you? One more time, at the end of the lesson we're going to talk about this one. Alright, if you go to Darwin X Zero or trading.com, it's for free. Otherwise it's $100. Alright, but this is for Dukascopy clients. Alright, this is not general. Alright. Okay, everybody, do we understand? Yeah, one more time, alright? So if I can, this could be a strategy rule. Before I enter the trade, I must wait for the higher time frame candle to close. See how this is tricky? If I would buy the 1 hour, 2 hour, 4 hour chart and not wait for the daily candle to close, I would be buying up in here and then I would lose. Can we understand this? So the higher time frame candle is the safeguard. Alright? Teach me how to make money. You need to learn how to lose less. Yes, how to lose less first. So the higher the typo higher, the higher time frame candle is the safeguard. Alright? The higher time frame candle is the safeguard. James says, wait for what? Yeah, we need to wait. Alright? Everybody, this is a skill, alright? And it's emotional. More of this in the Forex course 202. How to deal with emotions, how to tame emotions. Alright? Why is emotional? Because if you don't have enough patience, you are going to... How many of you online, not just Dukascopy YouTube students, how many of you maybe today you are buying Euro New Zealand? You know, on the 4 hour chart, right? What's wrong with that? I just told you, you know, you could be, see this candle right now, what's happening? Maybe in a second it's going to go up, but right now, if you bought the candle up in here, now you're in a losing already, you're in a losing trade. So you could be buying this candle, or this candle, or this candle. What's wrong with that? This candle or the last 3 candles, you know, or this candle is going to close in about, this candle on the 4-hour chart is going to close in about 40 minutes. Alright? But if you go on the daily, and I have New York charts, but on the daily, this candle is going to close in 8.5 hours. Does this make sense? TradingView, I don't know. I don't know how to put, but you have softwares, right? Alarms, MetaTrader, right? Me as a trader on the 4-hour chart, I'm going to wait for the daily candle to close before I enter the market. Alright? Boss, why is that? Because the cardinal rule of price action is that the higher time frame controls price action and movement on the smaller time frames. Pen and paper again. James, if you are new, write this down. The cardinal rule, the most important rule of price action, the higher time frame controls the price action and movement on the smaller time, in every aspect, by the way. When the monthly is moving up or down, but when the monthly is moving up, market wave wise, candles wise, trend wise, when the monthly is moving up, the monthly is grabbing all of the other time frames and it's bringing them up. Make sense? When the monthly candle is moving up, all the other time frames are going simultaneously up too. Boss, can you repeat please? The higher time frame. We've learned this already from the manual. The higher time frame controls price action and movement of the smaller time frames. And we've learned that, sorry about that, and we've learned, here you go, higher time frames, smaller time frames. From the free manual, send me an email. Concept, higher time frame controls price movement and market direction on the smaller time frames. Whoops. Alright, everybody? Alright, so back to the need to find candlestick formations. There you go, we are here, right? So if somebody's asking, got it, thank you very much. So if I buy now the 2-hour chart, this is wrong. There is no right or wrong, but you have no, everybody, there is no right or wrong, but we are trying to learn, we are trying to understand what means that I'm working with probabilities. Does this make sense? So if I buy the 4-hour chart or the 2-hour chart, is anything wrong? And you would say, well, no, nothing's wrong, right? Make sense? But because the higher time frame controls the smaller time frame, now I'm speculating, in 8 hours, this market potentially could go down to here. I mean, I don't know, it's potentially. So you would have a potential loser because you didn't wait the higher time frame candle to close. Can you understand this? Type in the chat, everybody, YouTubers too. Yeah, I can understand. Can you understand this, everybody? And this is the part of the technical skill This is the part of the technical skill, make sense? That's a skill. It's a rule, it's a skill, make sense? Boss, what if I'm on the 15-minute chart? Then the higher time frame is the 1 hour or the 4 hour, whatever pleases you, you know? Well, really it's 1 to 4, so it's the 1 hour. If you are on the 30-minute chart, it's the 4 hour. Alright, hedge fund trader James says yes. Okay? I promise you, everybody, I guarantee you, you can call me out anyway, online. Call me out and tell me this doesn't work. I guarantee you, if you can wait for the higher time frame candle to close, you are going to trade differently, you are going to enter differently, and I promise you, you are going to have less. You still are going to, this is not a guarantee, but you are going to have less losers. Make sense? Exactly, just because of the rule that the higher time frame controls price action and movement on the smaller time frame. Alright, Forex course 101 trading concept. We are going to use candlestick formations for timing. Decide if you want to use candlestick formation as part of your strategy, and if yes, use it always. Candlestick formations are short-term entry signals on all time frames. Candlestick formations, we are going to see from the manual, you know, those here. So those, this is not mine or ours, we found those pictures on the internet, everybody. Just Google Forex Bullish candlestick patterns, whatever, you know. You can choose any picture you want, it doesn't really matter. And candlestick formations are short-term entry signals on all time frames. So you can use this 15-minute chart, 4-hour chart, daily, monthly, weekly. They measure the bull-bear power right now and never as a general direction. Everybody write this down, pen and paper, or if you have the manual, just oh, give me a second. If you have the manual, everybody, just, you know, you can, how you say it in English, you know, mark, you know, mark the text. All right. Candlestick formation measure the bull-bear power right now. All right. 15-minute chart, candlestick formation, it's the right now on the 15-minute chart. Daily candlestick formation is the right now on the daily, alright? It's the timing. Trading concept, remember the market is going to retest the candlestick formation 80% of the time. So don't freak out when the market goes against you and retests some levels. NZD cat daily chart. Delete. What is the market doing? Example, I've shorted the market in here. Example, or I shorted the market down in here. You know, on the 4-hour chart. See everybody? Alright, that's the market, live chart. So 1, 2, 3, 4, so 16 hours ago that was the market, and maybe, just maybe, I was shorting, example, right? I could be entered short in here, right? And now what is happening? Oh, the market's going against me, you know, and all the heart palpitations and the sweating. Remember, the market is going to retest the candlestick formation 80% of the time. It's normal market behavior. It's normal. Some of you are sending me emails and text messages. Boss, what is happening in the market? How many of you get back the answer? Nothing. Boss, what is happening in the market? Nothing. Everything is as usual. Don't freak out when the market goes against you and retest some levels. You know, don't freak out. If you were here with the yesterday lesson, you understand bearish pressure. So you understand that whatever the market is going to do, 7 times out of 10, whatever might be the case, is going to push down. Right? And you are on the 4-hour chart and you go on the daily, right? And you say, oh my gosh, the daily is moving up, you know. Don't freak out. Alright, fair enough? It's emotional. Don't freak out. You've entered here and now the market is going up and you are freaking out. Oh, losing trade again. This is normal. Right? Okay, just stay in. Boss, but I'm afraid. Well, you need to work on yourself. Forex course 2 is going to help. Don't worry, everybody. Makes sense? A community can help you. Trading with a professional trader can help you minimize the fear, right? You say, oh, if Mike stays in the trade, well, I'm going to stay too. What the hell? He might know, you know, whatever. I have losing trades too. Alright? But the lesson is the market is going to retest, right? So don't freak out. Trading rule. In an uptrend, I'm going to buy candlestick formations. In an uptrend, I'm going to buy bullish candlestick formations and never, ever, ever, ever sell bearish. And in a downtrend, I'm going to sell bearish candlestick formation and never, ever, ever, ever buy bullish. This is the Forex course 101 trading rule. How to lose less. In the Forex course 202, it's the advanced course, it's the institutional trader course. It's going to be different. Don't confuse candles with candlestick formations. Candlestick formations are a mix between decision and indecision candles. Alright, so yesterday we talked about bullish, bearish, body, small body, big body, and the tail, the wick, small. Alright, now candlestick formations are a mix. If I have a bullish candle like this, and then I have I'm not going to tell you, but I have this candle and you need to identify if it's bullish or bearish. Alright, and then I have this candle. You know? Now this is a candlestick formation. It's a mix of decision. Decision is the exactly the body. It's a mix of decision. You see big body and you see the small body. It's a mix of decision and indecision candles. Alright? So this would be the example. Homework, check where are you following the rules and check where are you following the rules, and but also check where are you not following the rules, and try to figure out how your trading account demo would look like if you would just obey the rules. Alright. Now, to be clear, I'm going to post an image here which is not mine. Okay, it's from the internet. Why I'm because so copyright, right? Copyright issues. Okay, this is not mine, it's from the internet. You just Google. Alright, and the easy understandable is this picture. Alright, and those are bullish candlestick formations. Yes, this is in the manual. Send me an email. If you don't have the manual, it's for free, courtesy of Shola and Ernesto. Alright, send me an email. MikeFXBoss@gmail.com. Yeah, it's for free. Right? And by the way, James, if you are new to the show, everybody, I always almost forgot, we have the Fibonacci Mastery. This Saturday, we started noon UTC, alright? 15 hours course, and Fibonacci works. Alright? Just quickly. Alright, and we are here. So you don't need to remember the name, everybody. The Bullish Shooting Star, alright? The Bullish Morning Star. You don't need to remember those names. Bullish Engulfing Candle, Bullish Piercing Line. You don't need to remember. Just try to figure out, can you see those formations? And can you see that it's talking about decision, right? Decision, big body, indecision, small body. Big decision, small decision, big decision. Small decision, small decision, small decision. Bullish engulfing, huge decision. Alright? So candlestick formations are a mix of decision and indecision candles. Trading rule: the stop loss must be placed according to the pattern you are trading, as you will use candlestick formation for timing. If you place the stop loss above or below the candlestick formation, sorry, it will be wrong and you will be stopped. Alright, so this is important. Alright, everybody. And let's go to Euro. Alright. Give me a second. Alright, out, close. Alright. Just an example, but let's go on the 4-hour chart. Alright. Everybody, let's say that I'm shorting this market wave, alright? One more time. Just an example. Let's say that I'm shorting. Mohammed, where can we find this manual? Send me an email, alright, because I need to know your real name and where are you from. Okay, send me an email. Alright, I'm looking for traders through trading.com, through DarwinX, through Morris Capital Australia, through Dukascopy, of course. Alright. Alright, so just an example, everybody. What would you say? Is this yeah, I should make bullish, right? Bullish. Alright, bullish. Okay. Let's say that I'm buying this short-term uptrend, alright? Just an example. Alright. Now, and there you go. So let's say that I'm going to enter in here. Everybody, what do you think? Is this a bullish candlestick formation? 1, 2, 3? You're welcome, Mohammed. What would you say? Is this a bullish candlestick formation? Yes or no? I don't see the future. I don't know what is going to happen, but I'm seeing this 1, 2, 3, right? And with the counter trend line break example, you know, I'm going to say, all right. Oh, the manual, all right, the manual. All right. what would you say, everybody? Maybe not too... Alright. Yes, Melissa's yes. Yes, this is a bullish candlestick formation. Remember, everybody, this is theory, right? Those pictures from Google, this is theory. You know, this is now the live market. Anyway, I would say that this is, you don't need to learn the name, but this would be the kind of bullish shooting star, right? Maybe bullish morning star, whatever. It's a mix, right? Anyway. So what the manual is saying is that if I'm going to buy in here, if I'm going to buy up in here, I need to be clear on what pattern am I buying, alright? And if I'm buying the uptrend, student, analyst, traders, if I'm buying the uptrend, is the stop loss number 1 the correct stop loss, or is the stop loss number 2 the correct stop loss? Which one is the correct stop loss? Stop loss number 1, stop loss number 1 is the correct stop loss, or is the stop loss number 2 the correct stop loss? What's the answer? Boss, can you repeat please? If I am entering with the candlestick formations to have a better timing, alright? I'm entering here to have a better timing, alright? But I am buying the uptrend pattern. I'm going to enter in the right place at the right or maybe better time. Where should my stop loss go if I'm buying the red lines, the uptrend? Stop loss number 2 or stop loss number 1? Give me a second, I have a heart on the chat, so... Melissa is saying second, but sometimes I'm not sure what your advice is. There is not advice, it's a rule. Stop loss goes on the pattern traded. Melissa, it's a rule. Exactly, number 2 is the correct stop loss, right? Now, if you decide to trade the candlestick formation, which is another pattern, we've learned yesterday, we are using candlestick formations for timing number 1 and as a tradable pattern number 2. Alright? A swing trader is going to buy the uptrend and is going to put the stop loss down in here. A scalper is going to buy this candlestick formation on the 5-minute chart, 15-minute chart, whatever, and is going to go for 1. If you are buying the candlestick formation pattern, where is the right stop loss? Stop loss number 1 or stop loss number 2? Brota number 2, yes, but I thought it was the previous low to that one. No. Once the... So uptrend, everybody, we learned all of this, not a big deal. If I'm here, right, then stop loss goes in here. As soon as the market confirms the new high, right, this high is confirmed, then the stop loss goes down to here. Alright? Exactly. Talking about patterns, where is the place that is going to violate the pattern. This is the place, alright? That's the place. Make sense? If you are here, then this is the place that's going to violate the uptrend. As soon as the market made a higher high compared to this high, then this is the place that is going to violate the pattern. And stop loss goes on the pattern traded. Broto says number 1. Yes, sir. Melissa says, alright. So, moving forward, the stop loss must be placed according to the pattern you are trading, as you will use candlestick formations for timing. If you place the stop loss above or below the candlestick formation, this is wrong. Thank you, you're welcome. If you are trading candlestick formation as a pattern, only and only then the stop loss goes below or above the candlestick formation. Finally, unless you're a scalper, don't place the stop loss just above or below candlestick formations, especially on the 15-minute chart, 1-hour chart. Not a rule, just a suggestion. Alright? Boss, what should I do? I don't know. You need to build your strategy. Alright? You decide. You need to decide. Forex course 101 trading rules about candlestick formations. I'm in an uptrend. I'm going to buy bullish candlestick formation, never sell. Alright? Trading rule, if I'm not sure about candlestick formation, better stay out and wait for another candle to clarify / confirm the signal. And homework, everybody, try to identify candlestick formations on your charts. Until tomorrow, find a currency pair that it's in an uptrend and try to identify candlestick formation on the chart. Right? Yes, study the charts. So we are going to open USD CAD. Alright, USD CAD daily chart. Alright, everybody? Now remember, I'm never going to sell, but I'm going to buy, right? Candlestick formations. Alright? And, well, there is not a lot. Let's go on the 4-hour chart, maybe. We need more action, right? More action. Alright, alright, alright. Do we agree that not a long time ago the market broke this downtrend line on USD CAD 4-hour chart? Do we agree? Type in the chat, everybody. Do we agree that the market broke the downtrend line? Type in the chat yes, or type in the chat no, you have no clue what you're talking about. Alright, we need to speed up, alright? So, do we agree that I can chart low to high, high to low, 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 right? And I can chart an uptrend line. Alright. Now I'm going to try to buy bullish candlestick formation, alright? So I'm monitoring the market, I'm monitoring the market, right? Monitoring, and it's going down. And is this now, what would you say, is this last candle the bullish engulfing candle, yes or no? Five minutes and then I'm going to tell you about Darwin X0, right, Brota? Yes, others too, right? So is this, would you say, is this kind of bullish, this candle engulfing all the others? It is, right? So I need to readjust my trend line number 1, all right? And let's say that I'm going to go 1 for 1. Just it's not a suggestion, you know. This is the homework. And I'm going to go 1 for 1, and I'm going to go 1 per 2 also, right? That's the homework. And I'm going to put the stop loss below the candle, right? And I'm going to put the stop loss talking about uptrends, right? High to low, low to high, lower low, higher low, you know. All right. So it's quite similar. I'm going to put the stop loss a little bit lower, right? Okay, now let's see what is going to happen. It's going down. Don't see everybody, remember? Don't freak out when the market is going to retest, right? Don't freak out. Don't freak out. Is this another bullish candlestick formation? And we need to speed up, everybody. So yes, this is the bullish tweezer bottom. See here? This is theory, this is the live market. Anyways, if I would put my stop loss too tight on the candle, here I would be stopped out. Can you see it? Alright. And the market moving up and sideways and up and up and up, and bam! It went up. So I'm readjusting my trend line, right? Now it's like this, and so on and so on and so on. So I get 1 for 1, right? I got 1 for 1 long term, and now we're here, by the way, you know, USD CAD. Okay, everybody, this is the homework. All right, how to trade with you for free. Alright, how to trade. Join my daily trading desk through my partners in order to learn how to trade like a professional and trade and learn how to manage risk effectively, not to burn the account. Alright, you can go through trading.com, everybody, or you can go through Darwin X0, right? Well, you're going to have the recording, alright, everybody, to read the text. Okay, but anyways, thank you, Mike. So trading.com, this is the website. Alright, trading.com/Mike, or send me an email. Yeah, tomorrow I'm going to post this link into the, yeah, my bad. Alright, I'm going to put this link next time, or I can do it right now. Give me a second. Give me a second, everybody. Give me a second. There you go, right? It should appear. And Darwin X2 you have color. There you go. Alright, it should appear. Okay, so here you have you put the email address, first name, last name, you know, incubation level, this is your deposit. Alright, and here are the rules. Profit share 80%, and here are the stages 1, 2, 3, 4, 5, alright? What's the difference between Darwin Zero and trading? Excellent question. Trading.com is not for beginners. You must know what you are doing. Nobody supervising you. Alright? And it's a live account from the very beginning. And it's on your name, your money. You can deposit, get funded, and withdraw the next day. Alright? Trading.com through Morris Capital it's not for beginner traders. You're going to lose money. Even if it's $1,000, most likely you're going to burn the account. Alright? Now, Darwin X0, you know, you go here, you go to capital allocation, Darwin X0, you need to manage the risk effectively. Alright? So here you have the, oh, they changed track record, so it's not Bleed the Blues anymore. I need to change this one, sorry about that. Okay, I'm going to give you, just give me a second. So, Darwin X0, if you can come to this rating, to 75, then they give you a 30,000 live account in euros, right? They're from Europe. Okay, until then, compared to trading.com, it's a real account, but it's demo, right? But you don't have targets on Darwin X0, you have the, they want to see how are you managing your risk. And you can play around in here. So let's say that I made 1% this month, example. Let's say that I made 10% in the last 5 months, not a big deal. And let's say that my drawdown it's 8%. You know, you can play around. So calculate. Sorry, the amount type, it's not value, it has to be, oh, so it's -8. Calculate. See everybody, you're still in. Your rating is 78, you get automatically 30,000 euros live account. Alright? That's the difference. But sign up. Alright, so you go here, you can have, if you put FX Boss 20, you know, you're going to pay 75 euros. If you put track record, last time it was Beat the Blues. If you put that track record, also paste, apply, doesn't work, apply, you're going to pay 66.50. Alright, and then it's 38 euros per month, everybody. Okay, but remember, it's going to take you at least 5 months, you know, and it's written out here, cumulative return prior to 5 months. Alright, so you're going to stay in the game on the demo account, but it's real, meaning they're measuring you for 5 months, alright? In 5 months, if you come to 75, you got 30,000. Okay, Broto? What's the difference? Trading.com, it's a live account, but you have no rules, nobody's going to take care about you, nobody's going to look over your shoulder, how you manage risk, how you do this, okay? You need to be more skilled. Darwin X0, the downside is 38 euros. Alright? Trading.com, you can, if you're going to burn the account, you are going to burn $1,000. You know, you lose the account. You burn $1,000, alright? You are not skilled, not personal, you are not skilled enough. Darwin X0, the downside is 38 euros per month. Whatever you do, if you want to trade to sorry about that. If you want to trade with me for free, send me an email. You know what? This Beat the Blues looks like it's trade record now. I'm going to change it. I didn't know. Alright, whatever you do, trading.com or Darwin X0, send me an email. Alright? Yes, we have every day. Alright? Boss, how is the account? Well, Heraldo's account. Heraldo is one of the students of the Forex course 202. Trading account. And so far, that's the account. It's up a little bit, right? 50,233. Opening position so far 148. And if you go to account history and all history and save a detailed report, you know, so far this is the equity curve. What do you think, huh? Doing good? Geraldo is one of my students in the Forex course 202, and this is him trading with me every day and listening and being coachable, of course, right? So in Darwinic Zero we have to wait 5 months to get the money. Yes, correctly. Correct. Darwinic Zero wants to see how are you managing risk. And you get the money if you can bring your account to the rating of 75. It's not automatic. Alright, Broto? If you lost 2%, if you made 10%, and if you lost 8%, calculating 65, not enough. Alright, Broto? They are going to measure how you deal with the risk, how you manage your risk for 5 months, and you can bring the account to the rating of 75. Alright, then you have the live account, 30,000. But why I believe this is more for beginner traders is because the downside it's 38 euros, alright? Here this is another game. Alright, you must be more skilled. Alright everybody, our time is up. If you have any kind of questions, send me an email, alright? Don't be shy. I'm looking for traders. Don't be shy. I know I'm yelling sometimes, but I'm a nice guy. Alright, don't be shy. Send me an email. Alright everybody, our time is up. See you back tomorrow with another session. Until tomorrow, stay strong and think like a boss, right? Because you're the boss of your account.